Potter Manufacturing Inc. has 4 categories of overhead activities. The expected overhead costs for each of the categories for the next year are as follows. So here's the estimates, right? So we've got maintenance, we've got materials handling, we've got setups, and we've got inspection. And we want the estimated overhead in dollars, and we want the estimated cost driver. Let's do the costs. 120,000. How am I getting that? I want to highlight right here, right? Here's the estimated costs, what the cost driver is, and the estimated activity. So next, it's going to be 18,000. This is all dollars, 16,000 and 60,000. If I add these all up, this is the total overhead. There we go, 214,000. Okay, so now what drivers? Machine hours, material moves, setups, and this one is inspections. Perfect. So now we've got dollars, we've got the driver, and what's the estimated? 5,000 machine hours, 600 moves, 200 setups, and 1,000 inspections. So now we can calculate, of course, the activity rate. So here we go, the activity rate. Oops. We're going to take the estimated dollar and divide it by the estimated cost per activity. So let me just pull this down. This is all dollars, of course. Let's remind ourselves that this is dollars, and this is per machine hour, per move. This is per setup, and this is per inspection. Excellent. And keep in mind, do you notice I never add these up? They're different drivers. You cannot add it up. And I never add these up because they're different activities. You cannot add them up. Okay, currently the company applies overhead using a predetermined overhead rate based on the budgeted direct labor hours of 20,000. So we can actually calculate the plant-wide rate. Okay, so this is the ABC rates. ABC rates. Let's go down here and just calculate the plant-wide rate. Plant-wide rate, of course, is going to be the total overhead, estimated overhead in dollars, divided by the total estimated cost driver. Here, the total overhead is going to be the 214, because remember, it doesn't change. It doesn't change. We're still using the same total, but we're dividing it only by the estimated direct labor hours, which is 20,000. So I'm going to take that 20,000 direct labor hours, and this will get me my activity rate. 214,000 divided by 20, it's $10.70 per direct labor hour. So we've got our plant-wide rate. I'm going to highlight that in yellow. And we have all our activity rates, right? We're going to highlight that in orange. There we go. Now, the company has been asked to bid on a proposed job. Usually bids are based on full manufacturing costs plus a markup of 35%. Estimates for the proposed jobs are as follows. So we know direct materials, they're going to cost $2,000. We know direct labor is going to cost $6,000. Okay. Now, what we have to do is use ABC. So first I'm going to use ABC costing. So that means I'm going to do material moves. So material moves. I'm doing inspections. I'm doing setups, and I'm doing machine hours. Now it did tell me what they were. So look over here, you can see it right here. So there are 4 moves, there are 6 inspections, there are 8 setups, and there are 80 machine hours. So 4 moves, 6 inspections, 8 setup, and 80 machine hours. I'm just going to move this over a little bit because I want to have room. I'm going to move it over by 1. Okay. I'm going to use each application rate. Material moves. Be careful. Don't go from the top. Remember, you got to look, its moves is here. So I'm going to do this $30. This is inspections. So that's $60. This is setups. This is $80. This is machine hours. That is $24. So be careful. Don't just take it from the top here. If this happens on an exam, you're going to be wrong. So now we're going to take the actual number of material moves, multiply it by the application rate. Going to do the same here. Inspections multiplied by the application rate for inspections, setups multiplied by setup application rate, and machine hours multiplied by the machine hour application rate. We're going to add all of these together, and it'll tell us what the total cost is for this proposed job. Total cost is $11,040. If we do a 30% markup, we're going to add in the 100%, and then we're going to add in the 30% markup, right? Because we're going to take cost plus 30%. That's multiplying it by 130%. 11,040 multiplied by 130%. This is the amount we should charge our client. So proposed charge to the client using ABC. Now, what if we were using the plant-wide rate? Also called the traditional costing. What would happen? In this case, let's just go down a little bit. We would take the direct materials, and it would still be equal to 2,000. We would take the direct labor. It would still be equal to 6,000. But now we're going to take the overhead. We're going to take the number of direct labor hours, 600 direct labor hours right here. 600 direct labor hours. We're going to take the application rate for the plant wide. Remember, that's $10.70 per direct labor hour. We're going to multiply the two. That is 6,420. That's dollars. All of these are dollars. I'm just going to, there we go. So now I'm going to add them up. That is 14,420. If I want to calculate what price we will charge our client, I'm going to multiply this by, of course, 100% plus the 30% markup. There we go. Multiply it by 130%. And when I do that, I'm going to charge my client $18,746. Now let's just look. Was it 35? Oh my goodness. Guys started saying 30. I apologize. 35%. Now, if we're using ABC, we're going to charge them $14,904. And if we are using traditional, we're going to charge them $19,467. If we're using traditional, are we overcharging or undercharging? If we use the plant-wide rate, this is what we're going to charge our client. Yeah, we're seriously overcharging them. So we can make a statement now. If we use the plant-wide rate, we will be overcharging our customer by $4,563. So what could potentially happen to the company? They're going to do a bid on the proposed job, and they're going to bid $19,467. Do you believe that they will win this contract? No, they won't. If they use the plant-wide rate, they will not win the contract, because they're going to charge their customer too much because they're using the wrong application rate. Other companies that are using ABC costing are going to be able to bid $14,904. And so if you get a bid for $14,000, if you are the company who's the customer, and I get a bid from one company for $14,904, and I get a bid for another company for $19,467, which one do I want to pick? If both companies are the same, I'm going to pick the company that's only going to charge me $14,904. Is it in every case where plant-wide will result in overcharging? No, sometimes plant-wide results in undercharging, which is just as bad. Sometimes plant-wide, because all those costs, right? Like, let's go back up here, right? We're taking all of those 214,000 costs, we're putting it in one pool and using one driver. That driver may be wrong in that it's not reflecting the costs in all of the pool. So it may be that we end up overcharging the customer. It's just as bad to undercharge the customer. Sure, lots of people are going to come to us and accept our bids, but then we're never going to cover our overhead costs because we're not charging enough.